Hey everybody, welcome back to Markets and Sectors. My name is Mike Fairborn, Senior Manager, Trading Derivatives at Charles Schwab. Great to have you here for our class, our last class of the week. I just posted that in the chat, and great to see many of you here, many recognizable names, and welcome to all of you that are just new joining us here for this class where we, at the end of this week, at the end of each week, we do wrap up the weekly events, markets, sectors, individual stocks, earnings on stocks, big events that have happened to kind of get an idea and set us up for what we might end up seeing into next week. So we want to look at trends, different indicators as well. So looking forward to going into that, diving into that with you all here today. Yeah, great to have you all on board, folks. And we do have Connie Hill in the chat with us today. Connie, good friend and colleague of mine. Any questions or comments you have, throw those in the chat. That's exactly what that's for, so we can develop a bit of a feedback loop for you for any questions, comments you have. And with that, yep, absolutely. We're going to dive in. And by the way, folks, I did get some of those charts updated with labels that we've been waiting for. So I've got that. I'm going to share that, and so that's quite helpful in terms of our sectors, sector performance, relative performance, and along those lines. But with that, let's dive on into it. Let's get started with some disclosures, and we'll jump into things, folks. Information here is provided for general information purposes only, should not be considered an individualized recommendation or personalized investment advice. Now, paper money software application is for educational purposes only as well. Investing involves risk, including for some products more than your initial investment. Interesting, key point there. Futures and futures options trading does involve substantial risk. It's not suitable for all investors. We do look at the charts only here. We don't trade, but I want to put that in there just so we can dive into many of those charts. Finally, past performance is no guarantee of future results, and some additional information listed there as well. All right, well, that's it. Let's dive on into things right now and get the show on the road here. Yeah, we can start off with this. In fact, initially what I wanted to do is actually come over here and just start off with just the S&P 500, just kind of a clean chart, just to get us rolling here as we get going. But folks, we are holding in that range still. It looked like maybe one of the tech earnings this week, NVIDIA, might have pushed us up above that range. After hours, we did trade up as high as about 204 or so, 204 and change, before diving back down currently on that NVIDIA, which is still too within a sideways range as well. It's interesting because I was just wondering if NVIDIA, which has really kind of been a leader in much of what it does in terms of semiconductors, and it has at times led the Mag 7. As a matter of fact, one way to look at this, ever since NVIDIA began to kind of go flat over here, many of the Mag 7 stocks, not that there's a perfect correlation, but many of them have done what? Gone down over a similar time frame. NVIDIA is still holding up within a range here, but yeah, we did peak post earnings after hours about 204. So I know a lot of eyes were on that, and we dipped back down. I'm just going to kind of give you a general idea what that looked like in terms of percentages. But yeah, it was a pretty big dip to where we're at right now. That's about 12.5% or so. So it is a big player within the markets, and we were wondering how that might factor into getting the markets outside of its long and really extended range in here too. And well, what it did is it just pushed it right back into the middle, or more into the middle of where we were at. So we are a little bit towards the lower end of the range, but here we are. Again, we are keeping in here just to kind of keep track of systems and what might be happening in the market. We have put in here in place a couple of alerts, and that is helpful sometimes because those alerts can be helpful in giving us an indication if we're breaking above or breaking below a certain point. I do have to note, though, with alerts that they're not guaranteed to be delivered at any specific speed or time frame. It should not be used as a replacement for actively being aware of your positions. But I have not had any issues with it. My alerts have been fine, but just wanted to note that for sure, so you're aware of it. But folks, still holding in that 200-point range. We saw something interesting here, just big picture, and that is with the VIX. Now, what I'll say with the VIX before I dive into some of the other markets here, and let's just pull it out a little bit because it is interesting to kind of pick up on these longer term time frames, as you can see right there. Right around, I mean, this is the upper range. We hit it a few times, but really one of the key points that we focused in on here resides around 20, right? There's 20 right there. And we touched it, came down. Sometimes you break above it, break above it. Now, I want to clue you in on one thing here. When we went above the 20 back in November, right here, one thing that got us up a little bit higher, although it may not happen again, but it could happen again, because sometimes you get similar themes in the markets that carry through. With the VIX, you notice something interesting here. It's not like we just came down, shot up, came back down. What we're doing this time is we're actually holding this upper range a little bit more. We did some of that right here. There was a higher low in place, and we actually ended up having a little bit of extended run to the upside in the VIX, which was a downside move in the SPX. We don't know if we're going to get that. These can just be kind of like a big range that just kind of rounds over and comes down. But right now, as it stands, we are holding some of these higher lows, and we have not been able to go below that 20 and like sustain it into like a break here, like a lower low, lower high, kind of coming back down, which would probably spell or could spell. A lot of traders would say it would be expected to spell a move on the SPX breaking up. In fact, I'll just do that again real quick, just to remind us. So back over here, super quick. Here is our comparison chart, SPX right there. And there's their upper range up top. You can see that up here at 60, right? There's 60. This is where we're trading on the SPX. So I should have put that down a little bit lower here on the low side, because we're kind of in the middle. But yeah, if we start to break up, some traders would anticipate the SPX may be breaking down here. So watch this. This can be interesting, and we are holding that upper range, which is something to be mindful of. Just park that in the back of your minds. Again, if we come back down, and I thought we might do that earlier this week, it looked like it could happen because 30-minute VIX gapped lower, and we dipped, but then we broke up, closed the gap, and we began to make those higher lows. So it's really kind of still holding its cards and what will happen, but at least we have a general idea. If you start to break above what? Look at these levels, folks. Look at them now. This range here, it's a little bit higher. I'm going to mark this off for you. So right over here, in fact, I'm going to just go ahead and put an alert on this too, because we can do the exact same thing here. See all those key touch points that came in right there? Just right click, alert, break above. Kind of maybe an early warning sign, perhaps. Breaking above, or whatever you want to say. Break above highs. We'll put it like this. And then down below here, perhaps that would be a lower low we could put down. Remember, this has you got to flip it so it lines up, but just lower low, question mark. And what we're really looking at is risk on or risk off in the market in terms of a quick way to get that information. But now we've got those alerts on the VIX. All right. Well, we've got to hit this NDX. So on the NDX, you can see up top here, we've got an interesting perspective in terms of still holding this range. What a lot of traders, I think, might have been looking at, you can see, I'll take that SPX off the top here, but it was this range right here. We come off the bottom, almost like a dip, sort of like a head and shoulders sort of bottom here, but we came right up to this level and we stopped. Now, if NVIDIA would have broken higher, we might have extended higher. It may have pushed tech up, but NVIDIA didn't. Down like 12.5%, we said, from that intraday earnings that NVIDIA had, right? A big force in both the S&P and the NASDAQ. So this is kind of the range to the upside we could be keeping an eye on here. It is sort of interesting. You see the apex of the triangle. Oh, very, very close to that point over here too, where we touched. And these, I just carry these on because they can be interesting points where you had major highs and lows converging to a point, and boom, right there. It's just above this level, but I mean, imagine if you get above here, maybe the trend starts, maybe it doesn't. but traders could be looking at that. Those symmetrical triangles are interesting areas to carry on forward. All right. Okay. So what else is sort of hinting out there one way or the other? I've got a couple things to look at. There's the RUT. Now the RUT, if we pull this over here and look at some of the futures right over here, it tends to lead the market, and that can lead it to the upside. It can lead it to the downside. There's your net change column right there, RTY. That is the Russell future. Now I could throw the RUT up there. It's very, in fact, my gosh, it was like lined up. There it is. It was just 212. It's now 210, 212% down, 2.11% down right now. You see that? It can lead the way. It's clearly the leader. Now, it has led the way to the upside, but it too has been in a compression range. And you guys can see I've already mapped this out myself just to keep tabs on it and watch it for potential indications here. But we are literally right off of the bottom of that channel, which we've touched 1, 2, 3 times now. We're kind of close to it. I'm going to go ahead and take advantage of another alert in here. I'm just going to do create with the drawing, not the drawing set, excuse me, not create alert down here, but create with the drawing. And in this case, I want to know if it breaks below the trend line. And that's the default. Trend line break question mark. I got a good friend of mine who introduced me to the market years ago. And that was one of the things that he really focused in on that got, is kind of an interesting point is, hey, sometimes these trend lines are interesting. You got it right there. We've got the apex drawn over here too. I know a number of traders will look at trend lines, right, when they come up. And in this case, yeah, I mean, are trend lines that uncommon? No. I mean, look at the triangle. The triangle, you have 2 of them, and they converge right there. Now, generally, they'll make a move up or down before the apex is hit. But this is interesting. If the rut is going to lead the way, if it's showing us some risk factors there, okay, it could get us started because it's clearly the best performer over the year, going back all the way, I would say mid November for sure. Higher highs and higher lows. It's shown some real strength. Now, generally, the trend is, folks, what? Upside. And you guys know that, right? Higher highs and higher lows. We talked about it so much. And many of you way ahead of me on that stuff. I mean, here you go. Trend up, holds on the prior high, maybe another prior high right there. You're still holding. It is interesting, though, if you break. So there are, we want to kind of lay out both risk factors here, but that is one thing we have to say. And there's another area that traders will look at when they are looking for weakness. And it just so happens we're seeing some of that today. I'll run through a few of them right now. We'll see how this holds up into next week, but keep a watch on financials. I'm going to jump into the sector here in just a second, but to show you some of the stocks in the sector, that's a big move. That is a big move. Now, watch this how I show you over here. On Fridays, generally speaking, volumes tend to be lighter. A lot of times traders on the floor of the exchange or whatever the case might be, they might take a Friday off, a shortened week, so that there might just be less trading volume on stocks in general. That's big volume for a Friday, and that's a big move to the downside. In fact, that's a 7% move right there. Okay, that's not the dividend, which sometimes stocks will adjust with the dividend. And by the way, just a quick note on dividends. Dividends can be cut at any time. We're really not going into that, but I mentioned dividends, so just be mindful of that, of course. But there is the big decline coming down. It's a big bar. What is that set for? The X date, when that would be, the last day, you have to get in before this day to capture the dividend, but that's a little ways down. That's 450. But that has nothing to do with today's price movement in terms of, offsetting the price or what happens after a dividend. So just keep in mind, this is just solely happening on Friday, and I'll explain, I'll show you this too. But before we do that, look at this. Come over here with me and just go into well, let's do this. I'm going to just do a simple moving average of 50 days fine. And let's do this instead of putting it on the closing price. Let's just put it right on volume. So a 50-day average of volume. You got to make the lines a little thinner here under width, though. Otherwise, It's freaking hard to see. If it's just really thick, you really can't distinguish it between these other lines. And the last thing I need to do is actually make sure to show the study. There we go. Folks, we're well above. In fact, we still have what? 45 minutes left in the trading day. We're not quite like 50%, but we might be 25, 30% above average volume already on this. That's a big move. And how many lows have we broken in here? This is just one of the bigger players. I mean, Goldman's a big company. Not to say that it's the whole industry. I'm going to show you some of the others, but look at this. It's breaking right now and maybe even closing below. We'll see where it closes. We don't know if it's going to close down here yet, but that's a lot of lows to take out. It's a big bar. Come over here with me. Let's take a look at some others. Well, how about Citigroup? Down. What if it takes out a new low right there? Bank of America, down. Okay, how about JPM? Okay, not as much of a move, but you can see where an important level of support would be. Some of these smaller ones, Zions, this is kind of one that's in my neck of the woods. I think they might be based out of Salt Lake. I'm not certain, but that Zions is one. Key Bank, bigger moves. Okay, so watch this again. Banks can lead the markets, and you need to be mindful of that. And particularly in economic periods and interest rates. Quick note on interest rates. What do we see over here with the 10-year? There's a bit of a dip in the 10-year. Interesting. Oh, dang. Let me just pull that off. All right. I think we're still good. But there's your 10-year coming down. And I also noticed that some of the precious metals are bouncing. Silver, that's up quite 7%. Okay. So sometimes there's weakness in there on the silver. I've got a bit of a, this actually right here would be a inverse head and shoulders move. That's the target up there for silver. If in fact, if it makes that move, I'm happy to throw that on. That's just one of the price patterns out there. So there could be still some room to go as it relates to that. Gold, as you can see, still marching higher today as well. Higher highs, higher lows. Yeah, and I would say that it's trending very similar right here, like this range, quite similar to what we saw previously. Maybe not quite as strong as this kind of sort of blow off top over here, but it looks kind of like a similar move that we saw down here. We don't know if that's going to continue, but definitely have to say some strength there. One last one, there's copper. Copper, there are some ETFs that represent this group. We don't go into those in this class, but I think many of you might already know that. But just as a side note, some traders will look at those as well. But just coming over here and taking a look at this, you know, I don't know. I mean, I could actually make the case for a possible shoulder, head, and shoulder pattern right here. Of course, for this to break, you'd probably see something like, you know, you'd have to break down below here. We're getting a little bit of a what's referred to as a shooting star. Now, this candlestick pattern, you might see this candlestick pattern also at bottoms, or we don't know if it's a bottom or not, but after the price moves lower is one way to say it. If it's on the low side like this, it's just called an inverted hammer. But if it's on the upside, after you've made a run to the upside like this, just a run, then you call it a shooting star, but it can represent a reversal type pattern. Is what a lot of traders that look at candlesticks will look for. I'm not seeing. I was just going to scan through here. I'm seeing a lot of hammers or sort of doji hammers across the bottom here, or hammer-ish, but not shooting star. But that's the distinction between those two. Just as a side note, I say this so you can maybe look at other stocks as well as you dive in and utilize this information. Okay. Now, folks, one thing too, now I've looked at some negatives here to keep an eye on, and we've seen some things that could push prices lower, some areas to keep an eye on too. But one area that has been a little bit stronger ties into what's referred to as the Dow theory, and that is the Dow Jones Industrial Average and the Dow Jones Transports, both making a continuous run of higher highs and higher lows to keep that trend. Generally, too, they look at volume as well, but to potentially keep that trend going forward. I'll show you right now. So it's $DJT. All right, and we'll go full screen here. Notice over here, we on the transports, we've made clearly a series of higher highs and higher lows. Now, when these two go together, the Dow theory suggests that the trends will continue, and that's been a pretty strong trend. In fact, the transports itself are actually around a fairly big resistance level. That's like a big round number, 20,000. Notice we're pausing there, and I could draw a line right there. Now, what could give us some insight here, according to the Dow theorists and the Dow theory, is if we break higher here and we continue to break higher on, it's got to happen on both the Dow Jones Industrial Average. Then what they say is, with that sustained trend, consecutive peaks and troughs in both indices, right, and volume. I still have the volume line in here. Volume hasn't been really dipping. It's been fairly strong going up on both, on this. Okay. Then the Dow theory essentially states that market trends, talking about the market, primary, secondary, minor, they'll continue until a clear reversal occurs. And that would be like breaks lower, lower lows and lower highs. So you've got this, and you've got kind of an idea. The transports, if they break, it can lead prices higher, according to the Dow theory, but it's got to also come with this Dow Jones Industrial Average, and this one's lower. So we're going to have to start breaking highs here too for that theory to take place. Now, it's not unusual for the transports to lead, but if this breaks down through this extended range, I mean, remember, this is basically the first of the year. In fact, it goes back to about mid-December. We're basically at the same level. If we were to break this, it really doesn't matter what the transports do. The Dow theory, DT for short, well, according to theorists, they would say, well, oh, not going to see it in black. How about red? That would be off the table, and it suggests maybe some weakness. So there's another sort of a indication that we can be focused in on here. All right. So that's a lot of that. That's markets. All right, we're still rolling here in the chat. Great to have you all on board. Oh, one quick note too is I mentioned this, that, when we look at the VIX, that's the volatility index for the SPX, and we're watching some of those levels. But the NASDAQ too, with technology in particular, and the MAG 7 and the roles that it plays right over here. Oh, I have it listed. There we go. The MAG 7 list of stocks. Remember we said when NVIDIA went flat, a lot of other things went down. Meta, quite a big dip. Microsoft, quite a big dip. Apple, quite a big dip. Well, then it actually held back up a little bit. Amazon, though, quite a big dip. NVIDIA, Tesla's holding up okay, and Google itself is holding up okay too. But if these start going, it could put even more pressure on these areas. But a big push in the markets. Now that we're talking about this, here it is. It's the VXN CGI. And that's the volatility specifically for the NASDAQ. So now we're looking at the VIX on the NASDAQ 100. And you can see that its area is up a little bit higher. I'll put this into the chat just so you guys can see it. Or have it, but it's a little bit longer symbol. There it is. And that is for VXN CGI, VIX, basically the volatility index on the NASDAQ 100. One thing I'll state here too, by the way, this is really throwing off the chart. I am just going to, let me see if I can do this real quick. The chart doesn't look like that. You can correct that bar. I'm just going to push this up a little bit into a more realistic area. I'm going to say like the low here, which is totally jacked up. That went all the way down to 9, which it didn't actually happen. I'm just going to say like 19.5, just to put it in the realm of maybe where it was, somewhere in here. Okay, so you can do that and correct that bar. I don't really know what that level was, but we've changed it. Okay, quick note, what do you see on this? Are we holding the range? Folks, we are. We're holding it higher. We've actually made a pretty progressive move to the upside. I guess you could say it that way. Look over here. How did we get to these levels last time? We just have to look at the chart. We did inch up higher. It was a trend. and we didn't start going lower until we broke below that trend. We didn't. We didn't. And so where would that trend be here? Somewhere like this. It's almost lately forming a little bit of a triangle here too. But I will say it's inching up higher. So we've got to watch this. And so keep in mind, banks, the VIX on both of these. We talked about the Russell as well. Those are maybe some of the indications to the downside that we can keep eyes on and watch this into early next week as well. It is kind of interesting to see that volume spiking, though, on banks on a Friday. But that remains to be seen, so we'll just have to go with it from there. All right. Looks like Connie's got a few things cool in the chat. Perfect. Let's go over here now, and let's dive into the newest upgrade to our sector rotation grid, which I'll share with you guys right now. So now you'll notice that we have labels that will stay there regardless. And I don't know why I didn't think about this, because I do the ThinkScript class. You'd think, hey, Mike, 1 + 1. Yeah, 2. Okay, but I didn't think. I just think, oh, how do I get them on there where they just stay? One way to do it is just to create a ThinkScript. Now, ThinkScripts aren't guaranteed for timeliness or accuracy. I'm going to share it with you guys in just a second, the new grid. But now you can see over here on a 1 week basis where the strength is coming in at. Folks, it is not technology. Okay, it's not technology, but look across the other sectors. On a positive note, we're seeing, especially over the last couple of days, 2-3 days for a lot of stocks, with the exception of, financials today, just looked at the banks and other areas, but look at that, they're trending up. So this is going to be a key point, just want to mention, that a lot of traders will focus in on, and that is if the market is really going to crash a lot of times, not every time, but what traders will look for is they'll look for a whole basket of these that are showing weakness. I'm going to show you a 6-month here performance of these in just a second, but are we getting that on this week? What are we seeing on this week? 2 out of 11 are showing weakness. The rest are showing generally, collectively, on average, support or moves higher. So it's not kind of like a full market breakdown, but maybe some rotation. Because, another way to look at it is if technology is going down, well, financials, could money be filtering out into other areas? Absolutely. We talk about sector rotation here, and that's what we could be actually seeing. Now, let me share this with you guys. The grid itself is not a ThinkScript, but within the grid, it is. And so I just mentioned too, not guaranteed for timeliness or accuracy, the ThinkScripts, but this is just a label. So I'll throw them in and throw it in right now. And that is our new script right there. In fact, I'll just make a little note so you guys can see it in the chat. But by the way, I always put this in the description section below the video for those of you that do view this on the recorded session. That link will be down there. I wouldn't doubt it if some of you actually beat me to this, getting those labels on there, but we've got it on here. You can change these labels. By the way, just a quick note, because I do teach ThinkScript and a few things. I'm just going to show you what it is. Anytime you want to put labels on, I've got to just we're just going to any one of these financials here. This is the extent of the script. Now, by the way, it is on an indicator, so you got to put it in the indicator column area, just as a note. I just left it in here, new study 39. I guess it's my 39th new study with that name on it right there. If you look at it, that's it. That's the extent of ThinkScript right there. Add label, open parentheses, just copy this. If you ever want to have a label in a box that we use in these rooms, you can do it just like that. If you can't make the font bigger, you can't do it in ThinkScript, but what you can do is if you put spaces between the financials, it will expand the general size of it. So notice I have a space in between all of these. Anyways, folks, there you go. By the way, for those of you that are new, quick note, copy that, go up top under setup, app, open shared item, paste it in, hit preview, and save that grid. It will be under your grid charts right in here where you can pull it up. Now, jumping over here, here is a 6-month grid. And, oh, I'm sorry, that's not the one I was after. It's this one right there. Rotation grid. This is actually 6-month as well. Okay, that's right. The labels on this shift as well. I'm going to have to put the labels on here. Okay, that's our addition for next week. I'll have the labels on these 6 months here. But such an interesting point to note on the 6 months. Remember this. This is rotation relative to the S&P 500. So are we seeing strength relative to what the S&P 500 is doing? It's a great way to look at it. Notice over here the extent of financials. Has it been showing weakness? Yes. Technology, yes. And it's only begun to break down fairly recently. Key point on the sector rotation when we're using relative strength. See that indicator sticking out on all these? Relative strength relative to the S&P. Relative strength can change early, start to break down before the actual stock charts themselves begin to trend lower. Okay, because financials, what did we say on financials? What were they doing? On many of the bigger names that are in the S&P, they were up in this range. Notice the weakness here. That's not a good sign for actual financial price data to necessarily to stay up. And in fact, traders will look for that to weaken because it's showing money could be flowing out of those and into the other areas. Where do we see strength? You guys could see it. Not really in communication services either. It's tied to technologies, very close. Clearly energy, materials, not discretionary. Staples, somewhat healthcare and industrials, utilities, and real estate. And when I say strength, I mean, if you go back and look at these folks, many of them are January to December of last year. So they've been going on for a while. And many of them are more than that. Why is this one not zoomed out? All of them are zoomed out except for that one. So let me just do this. Anytime you have an issue like this, zoom out, zoom out. There you go. Much better view. Now we're all even. I'm just looking at September. Cool. Okay, I'll tell you what. I'm going to change this. I'll update it right now. Save grid as. And I'm going to send this one out to you guys so you have it. Okay, these are updated now. So you might want to just consider updating that. Share that grid right there. And here is the 6-month. Okay, there it is. By the way, I had to change today. This one was listed as a 3, 3, and 3-month. Now those are all, we're all equal at 6. For some reason, though, I had them at 3. Everything's 6 now. Really helpful. Okay, awesome. Now this is where we stand here. I wanted to go back and tie in one last thing before we hit our general market review, and that's this. Okay, if we are looking at the SPX, a couple of other quick notes to help us keep an eye on this. And I talked about this in my ThinkScript class. And what it is I did have in there, we were looking at some of the indicators that will show us compression of prices. And a lot of times when you get price compression, what you'll end up getting is a breakout one way or the other. Now, you don't have to get it, but a lot of traders will look for breakouts to occur. I'm going to thicken this guy up a little bit. There we go. Yeah, sure. We'll keep it red. Okay, so we've got a couple of indications here in terms of trends. Let's do this right there, and I'll show it to you. So you guys, I'll give you a link so you can check this out if you want to, or we go into more detail on it. And we actually did a scan on it as well. I'll share that link in the class. I'll show you where it's at too. But if you come over here, folks, you can see, I can't remember the last time I saw the market in that much compression. I can't remember. It's been so long where the Bollinger Band is below the Keltner channel. The other thing too is the ADX, built by Wells Wilder in 1978, along with the RSI and the parabolic SAR. A few big standouts that a lot of traders will use. I mean, in terms of indicators, I'm just saying, it's been around for a little while and it's pretty popular by a lot of traders. But notice over here, when it's below 20, you get You can also see this is actually a better indication in a lot of ways. In fact, we began to break below 20 right there. That's the 1st of November. Did anybody see price consolidation slowing down before then? No, we went below 20. Look at this. This was a long trend. These are months. Right there when we went below 20, what did we do? We effectively went sideways. And so it says if you get above 20, it doesn't matter the direction. It just means that you may be coming out of that trend. Is how traders would use this. And what does that mean? If you go below here and you start to break above 20, be mindful because you've been in a compression range. And when you're in a compression range, like a triangle, what happens? You guys tell me in the chat, what happens when you're in a compression zone? What can happen a lot of times? What do they look for? They look for bigger moves or smaller moves? Doesn't matter the direction. Bigger or smaller moves? What do you think? If you said bigger, a lot of traders will look for a coiling of price to mean a bigger move one way or the other. So if we break up here and we go above 20, we might trend higher. Notice we haven't had any indications of that at all, even here, even off that low here. Now we're in a tighter range. But if we break this range and then you get the confirmation here, that's something that traders can look for, folks. Here is the Trader Talk channel. I just want to highlight where this class is because I built a scan on this to find actually stocks out there too within the ThinkScript class. I'll just share the class here. It's beyond the squeeze. I'll just copy this link here, link address, and I'll put this in. But that is the ThinkScript class. It just says beyond the TTM squeeze, where we went into the ADX. By the way, in the meantime, folks, if you like what we're discussing here today, you're finding it helpful, useful, do me a favor, just smash that like button. Lets me know that it is it's valuable content for you to consider. Here is that link right there to that class. So beyond the TTM, where we talk about this with that scan. But there's that playlist. You'll just see it at the top of that list. All right. What else we have? Oh, yeah, before we're done, because we're kind of in that phase where we've got to get through these other areas. But that was sort of a interesting level. You don't see this much very often, but you'll find the same thing can happen in stocks too. Compression of prices, ADX below 20. Breaking above 20, and look at this. It actually caught this one over here too. Do you see it? That's considered compression. Now, the TTM did not catch it. Notice we were all in green. But you notice we began to dip where? Interesting spot. Who would have thought it happening right there? Where did it break back above? Where that trend began again, which actually is the other triangle line that we have in place here too. You can see the yellow lines. So it can be effective on markets. It doesn't happen very often, but when it does, some traders will look for that for insights. Now, markets and sector review. Will the bounce be to the upside? All those sectors showing relative strength. Breadth is what it tells us. Market breadth. Over here, market breadth. Am I going to spell it out again? I guess I am. It's a longer word, but I just started on it. There you go. Market breadth. Higher highs. I'm going to zoom this up. Make it big so you can see it. That hit a new high. This is hitting highs. In other words, on the NYSE, 2,700 plus stocks generally. Traders will look for this as an indication of possible. There's more breadth, and if you're making new highs when we're in tight into a range, this is giving an indication that maybe monies might not necessarily be leaving the markets, but going into other areas of the market. That's the advanced decline line. Okay. SPXEW, along those same lines, folks, it is in fact showing strength. That's higher. We just hit a high here. We're almost at all-time highs when we equal weight the S&P 500 index. Okay, there it is. We made it to it. 5-year weekly. This is the very first sign of an omen. The Hindenburg omen spike. We haven't had it. We haven't had it for months. 52-week highs and lows. Okay, highs and lows. You're getting a fair number of them actually occurring, okay, in the markets. Now, it can mean a chasm in the market. Right now, it doesn't mean a lot. You notice over here, you did get these spikes at different times when there were some weakness. The key thing here is a lower low and a lower high. So what this tells us is it could mean more. There could be a larger decline if prices actually begin to break lower. And that's actually a key point that you cannot overestimate. If they begin to break here, you might have a force behind them, kind of pushing them a little bit lower. So folks, that's what we have today. Oh, lastly, yeah, do we follow up here on the so according to seasonality, we might still go sideways. Well, according to the average, but we're really holding low in February. Will it kick in and show us seasonal trends to the upside? Remains to be seen. Folks, one last thing, be sure to give us a follow on X. There is my handle right there, Mike Fairborn, CS. And some of you have been asking for sunsets. I'll just put that in the chat. I'm sure you do that the same as well, Connie, because I do take sunsets, visuals of sunsets. I get a nice valley view, and I did take one just for you guys here. This is a winter sunset. There was no snow. We haven't had much snow. That's across the Wasatch Front, across the Greater Salt Lake Valley. And in the distance is the Great Salt Lake. Boy, it's in the distance. But that Antelope Island basically surrounded by the Great Salt Lake. Little sunset for you guys there. Have a fantastic weekend. It's been great being with you. Thank you so much, Connie, for your help in the chat. Thanks to all of you behind the scenes, too, on our production team helping out, doing such a great job. With that, I wish you a fantastic rest of the day and a good weekend coming up. We're almost there. Take care, all.